Hello students, hope you are doing well, and I welcome you in this day 2 of ACCA Practice to Pass webinar for paper AAA, which is being organized by ACCA for September 2022 session. And I am your trainer Haris Hanif, and I do teach at the Tabani School of Accountancy, which is the Platinum ALP by ACCA. So this is day 2, and I'm going to resume this webinar from the area where we ended yesterday. And before going to resume my webinar, I would like to make sure whether my voice, screen, video is all clear. Am I audible? My voice, video, screen is all clear. All of you, please respond here in the question box. My voice, screen, video is all clear to all of you. Okay, all right. So in the day 1, which was yesterday, we were talking about risk assessment, and I had a discussion with you people regarding the 20 professional marks, and so how to apply those professional skills into your AAA exam. And we were on the topic of risk assessment, which is the most important requirement, and we are solving question number 1 from the specimen exam for September 2022 session, and I'm going to resume that thing from here. In this specific question, where there was a partner email, and I had told you people that you need to respond accordingly respond accordingly in the formatting, which is in the format of an email. So for that communication, you are receiving 4 professional marks. And one thing which we had discussed yesterday, that it is our new audit client. It is our new audit client, and so for the new audit client, your materiality level should be lower down. And I had opened the selected financial information. I had opened that selected financial information in which we had calculated the lower and the upper scale of the materiality. Remember that you need to apply your professional skills as well as the technical skills, right? Now, this is the partner's email. It's a new audit client. The background information I'm going to discuss, and this was my briefing note in the last session, which was yesterday. And this briefing note is to normal start audit partner from audit manager, subject audit planning of Crux Group. And remember that I had told you in the last class, which was yesterday in the day 1, that you are playing the role of the audit manager. You are not the one who is expressing the opinion. You are not the audit partner. You are the audit manager. You have to respond to the email, and simultaneously in question number 2 and 3, when the junior will be bringing you the evidence, you need to evaluate whether those evidences are sufficient and appropriate enough or not. So the briefing note, the first requirement was about the evaluate and prioritize the significant risk to be considered in planning the audit. You are not required to consider the audit risk related to the foreign exchange transaction and balances, as this will be planned separately, worth 25 marks. So we were on the briefing note, and this was the introduction, for which I had given the hint I had explained how to drop your answer, right? Now part A, evaluation of audit risk, materiality. Why I have written down the materiality? Why? Because you need to write the reason, and I had summarized the professional skills with a single word, why. Why means the reason. You have to explain whatever you are writing. You have to explain with a logical and sound reason. Your reason should be rational, right? Now, so the materiality I had calculated over here, and I had also written down, then since it's our new audit client, and so the level of materiality should be set at the lower scale because of the increasing chance of the detection risk, right? Now, this is the materiality, and now I'm going to apply that thing to the partner's email that this is a new audit client. And remember that whenever there is a new audit client, I'm going to give you the hint. Whenever there is the new audit client, for new client, there is a risk of detection risk. Detection risk is that there is a risk that auditor may not be able to detect the material misstatements that may be present in the financial statement assertions. And while calculating, while estimating, or while assessing or evaluating the detection risk, you also need to write down about the risk of opening balances plus comparative financial information, because you were not the auditor of last year, so there is a risk that the opening balances and the comparative financial information was not properly presented and recorded. There is a risk that there may be misstatement in the opening balances. And remember that ISA 500 is there, ISA 510, sorry, ISA 510 is there, who says that auditor needs to be very careful that there may be the misstatement in the opening balances and the comparative financial information, and so you need to apply the ISA's requirement, that is ISA 510, to ensure that opening balances and the comparative financial information are free from the material misstatement. So whenever there is a new client, this is a very important and significant risk. Now, if I come to the yesterday lecture that I had summarized, that you need to write down the significant risk. And significant risk, these are the hints of the significant risk in which there is a inclusion. This list includes the new client as well, right? So let's now go to the answer onto this ACCA practice platform. I had written down about the materiality since our new client, and so I am writing here new audit client. I'm writing here new audit client. This is my new audit client, doing it bold. And remember that this 4 steps model: matter, correct accounting treatment, risk of wrong treatment, impact on the financial statements. We are going to apply all these things over here. So what is that thing? The crux group. The crux group is the new audit client, and that audit team. Now this is not the matter of the correct accounting. Now this is the matter of the correct audit treatment, and the audit team should have complete information about the entity and its environment, in accordance with ISA 315. What is ISA 315? That is understanding the entity and its environment. So you should have a very sound knowledge and information about the entity and its environment in accordance with ISA 315. And since this group is the new client and the audit team is not having the prior experience related to this group, and so there is the audit risk that audit team may not be able to detect the material misstatements that may be present in the financial statements and so the risk is said to be the detection risk, right? That there is a detection risk. Now you should write more, that there is also the risk that opening balances and comparative financial information may not be correct, and it may be misstated, right? It may be misstated. Now you need to come up with your recommendation as well, that you need to apply the you can say the rigorous or the tough audit procedures, so that you may be able to obtain the sufficient and appropriate audit evidence. So I am writing here, in addition, there is also the risk that opening balances and comparative financial information may not be correct. It may be misstated, since last year audit was not performed by our firm. So it needs to be checked. What you need to be checked? What's the requirement to check? That according to ISA 510, the audit team should ensure that opening balances and the financial information, comparative financial information, are not misstated. So it needs to be checked in accordance with ISA 510 to ensure that opening balances and the comparative financial information is free from material misstatements. Furthermore, you should write furthermore. Remember that in the day one I had also given you the complete information about the 4 professional skills that whenever you are required to evaluate. So after evaluation, remember that after evaluation, you should also respond your courses of actions. I'm just giving you a very short and quick recap of that specific thing for which I'm talking about. That's it. See that whenever you are required to evaluate, so after evaluation issues, you need to come up with the recommendation as well, right? You need to come up with the recommendations as well. So I'm now writing in a same theme that you had recommended, that in accordance with ISA 510. No need to write out the complete name of international standards, right? So I'm writing here, furthermore, the audit procedures should be increased based on the increasing sample size, so that sufficient and appropriate audit evidence can be obtained, right? So I had written down enough for that, along with my recommendations and along with my suggestions that what to do next, right? So this is my new audit line. Mr. Navin, I had guided you that when you log into your practice platform, there are 4 papers, that is a specimen paper, the mock paper, practice question 1 and practice question 2. These 4 papers are very much important to practice. Mr. Jahanzeb. Yes, Jahanzeb Tariq. I'm addressing your question. This is not the risk. This is the materiality. This is the part of the evaluation. Now the risk start from here. I have just written down here that since it is the new audit client, since it is the new audit client, and so the materiality level should be set at a very lower scale, because when you set your materiality level at the lower scale, materiality is low and your procedures are high. That's what it means. It is not the risk itself, it is the evaluation, or you can say the starting point, or you can say the starting point of the answer. Simple. Okay, now this is the background information. Mr. Jazid, is it now clear? So that okay, that's great. Great. Now I'm proceeding with this thing. This is the background information. This is the background information. I have, this is a partner email, right? The background information I'm opening and reading it. The group operates cruises under 3 brands, under which offer passenger a variety of cruise itineraries with a wide choice of destinations. Cruises typically last for 2 weeks. So some last for up to 6 weeks. Some last for up to 6 weeks. You need to prioritize the risk. You need to prioritize the risk. When the new client is there is a detection risk, right? And when there is a risk of a potential fraud, you should make it the priority, right? Now I am now opening this thing. You can just read out this selected file information. I'm now going to read this thing by scrolling down. This is the group revenue. This is the operating profit. And here it is written something. Revenue includes. It is written here something. You can just extend this. Okay, I'll adjust my window accordingly. Okay, revenue includes passenger tickets, which accounts for approximately 85% of revenue. When the customer books a cruise, they are required to pay a refundable 20% deposit, which is initially recorded as a deferred revenue. Now that's the correct treatment. The balance of 80% is paid at least 6 weeks before the cruise commences. At least 6 weeks before the cruise commences, and at that point it is also recognized as a deferred revenue. The full amount here, the important point, the full amount of the ticket price is transferred to the revenue when the cruise starts. When the cruise starts, irrespective of the duration of the cruise. Now this is something against IFRS 15. If I can give you the summary highlight, that whenever there is a performing condition, so IFRS 15 says that recognize the revenue when performing condition is met. And let's say there is a tuition center, there is a college, or there is a university. When they charge the fees from the student and the course is of 3 months, 2 months, 6 months, so it should be spread over the performing time period. Now what this company is doing, they are, the last line is that you can focus here on my arrow, the mouse, and the full amount of the ticket price is transferred to the revenue when the cruise starts, irrespective of the duration of the course. And you can see that the cruise typically takes up to 6 weeks. The cruise typically up to 6 weeks, right? The cruise takes up to 6 weeks. So the point to be noted is that when the cruise is taking for 6 weeks, so how they are recognizing the revenue at the starting point. It should be spread over 6 weeks. Let's say, for example, the financial year end of the company is 30th September 20x5, 30th September. What if the cruise trip start at, let's say, 20th September, and the journey it lasts for 6 weeks. It should be spread, so it should not be recognized immediately. This is not in line with IFRS 15 treatment. It should be recognized over the time period, over the performing time period. And you know one important thing, you have studied ISA 240, that is fraud. There is ISA 240 fraud says that while understanding the entity, you should assume that there are chances of fraud, and fraudulently, it is specifically written in this, and fraudulently the company may overstate the revenue, and it is the matter of cutoff. And see that it's a matter of revenue, it's a matter of fraud, and so it becomes the significant risk for us, right? Now here I'm now going to write that briefing note, audit client, and then I am writing here that revenue recognition. I'm writing here revenue recognition. That what is this revenue recognition? See that revenue recognition, this is the matter of fraud as well. It is a matter of IFRS 15, and it's a very significant and important matter, right? So I'm writing here the company takes 20% advance as a refundable amount, which is treated as deferred income. And what's the next thing, that about the 80% when the customer books, they are required to pay 20% deposit, which is initially. The balance of 80% is paid at least 6 weeks before the cruise, which is also recognized as a deferred income. So that's the correct treatment. I should appreciate it, because when you are trying to evaluate, you should write more and more. And same treatment of 80% revenue which is collected from the customers at the time of booking the cruise. Full stop. IFRS 15 says that when there is performing time period, then revenue should be, you can say the revenue should be split down. Revenue should be recognized over the time period. Revenue should be recognized over the performing time period. However, when the company is charging it, the company transfers when the cruise starts. However, the company is transferring the revenue when the cruise starts, irrespective of the, what's the exact statement? Irrespective of the duration of the cruise. Irrespective of the duration of the cruise. Which is not in line with IFRS 15, and so revenue can be overstated. In addition, In addition, ISA 240 says that while understanding the company, the auditor should assume that there may be risk of fraud in the revenue recognition, that revenue may be recorded in a wrong time period, and so it becomes the significant audit risk as well. All right, so this is the revenue recognition. You are not supposed to write the complete name, you are not supposed to write the complete number of ISA and ISS, IFRS as well. If you know that thing, if you don't know, then simply write the treatment. All right, and so it becomes a significant audit risk as well. Now that's a very simple thing. That's a very simple thing I have written down, that there is a risk that revenue can be overstated, and simultaneously you are supposed to write the fraudulent kind of thing, and so this my answer is complete with respect to the revenue recognition. Now let's move forward. The brands are internally generated. These brands are internally generated and therefore are not recognized as an intangible asset within the group. The brands are internally generated and therefore not recognized as an intangible asset. Okay, that's fine. Information about the 3 brands operated by the group is as follows. Sunseeker Cruise, which visit beach destinations in the Caribbean, Europe and North America. Explorer Cruise, which focuses on visiting cities and landmarks around the world. Pioneer Cruises, which takes in areas of natural beauty including Antarctic and Alaska. Business development in the year. Sunseeker Cruise, in this financial year, the group will spend 75 million. The group will spend 75 million on upgrading and maintenance of the Sunseeker cruise ship. These luxury ships have to adhere to a very high standard, so that group regularly incurs high expenditure on the maintenance, as well as refurbishment. Several ships have been enhanced by installation of new entertainment facilities, including cinemas and gyms. Equipment in the gyms will need to be replaced on average every 3 years. Now, they are spending 75 million on upgrading. 75 million on upgrading, right? Now you had calculated the materiality level 75 million. It is very much important for me, right? It's, if you can calculate this 75 million, what does it become for profit before tax? For the profit before tax, or even the total assets, it's 75 million. It's 75 million. So it becomes, I'm just showing the calculation over here. Okay, log cells cannot be modified. Yes, you need to apply the calculator. It is 4% of total assets and 93% approximately of profit before tax, and so it is extremely material. It is extremely material, right? It is extremely material. So if it is material, 75 million, it is related to the upgradation and maintenance. It's a very important thing. Why? Because of its materiality. Now I am putting up the heading of the upgradation and maintenance. It is upgradation and maintenance. First of all, you should write up the amount and also calculate its level of materiality, because you need to address why it is material. You need to address with a complete reason. So I am writing that the group is going to spend, the group is spending $75 million on the upgradation. I'm using almost the same terminology which is written in the question, of the Sunseeker cruise ship, of Sunseeker cruise ship, and the amount is material, full stop or comma. It is approximately 93% of profit before tax. That is 75 divided by 81, and 4.1% of total assets. You should show the calculation. That is 75 divided by 1800, and so important aspect to be considered based on its materiality at significant level. Now, what is the correct accounting treatment? The upgradation which involves the purchasing, of the capital equipments, like new facilities, like the refurbishment, like gym and cinemas. It should be capitalized, and the maintenance should be expensed out. Now think that, what is the benefit to the board of directors? Will they be bonus for the lower profits? Not at all, absolutely not. They will be bonus based on the high profit. So there is a potential risk. This is not the risk based on its matter. This is the risk based on its materiality level. Since it is 75 million, right? It is 75 million. So there is a risk that the cost may not be split correctly between capital and the revenue expenditure. It may be possible that maintenance portion of the cost may be wrongly capitalized, so that expense may be lower down, and there is an increased chances of assets and the profits. And think that it would also leave the impact on the depreciation. That depreciation expenses would also be overstated. Definitely, when something which should be expense, and if it is wrongly capitalized, the depreciation would also be wrongly capitalized, would also be wrongly charged. So it is important to be considered based on its materiality at significant level. The cost of upgradation, let's get the words from the information. Refurbishment, installation of new facilities, the upgradation, like installation of new facilities like gyms, cinemas, capital expenditures. I should write refurbishment. Should be capitalized, and the amounts of maintenance should be expensed out. You should write the correct accounting treatment. And remember my dialogue, if you are able to think the correct accounting treatment from your mind, the risk will come out from your heart. You should reverse it. Okay? So the refurbishment should be capitalized and the amounts of maintenance should be expensed out in profit and loss. There is a potential risk that maintenance portion of the cost may be wrongly capitalized. If so, then what will be happening? If so, I mean, if this is the risk, if it will be materialized, and if so, then assets would be overstated, and due to not charging the maintenance cost, the profits even can be overstated. Extending the impact of this risk is that depreciation even can be overcharged because of the overstatement in the assets, in the capital expenditures, right? So impact and impact, that is also the potential risk. Remember that impact and impact both, these are the potential significant risks. Now you should read the question in a serial manner, in this orderly manner, so that you will be able to identify the important risk, and so you should write the risk accordingly. Now there is another risk, is that moving a bit forward, I am taking the question if there is any. You don't need to mention the number of ACCA. It's not actually required. The link of WhatsApp group is not working. Just wait a minute, please. Just wait a minute. I'm addressing this issue. Just wait a minute. Now you will be receiving another link for the WhatsApp group. Now you will be receiving the next link. Please click on that and you will be joined, or you can even message me directly as well, so I will be giving you the link. Now Navidaswar, that's something I cannot say because of the limited time. Alright, now I'm closing the question window and going to the requirements. Upgradation, I have covered it. Now what is this written here? What from this information there is yet another risk. It is written that as well as several ships have been enhanced by installation of new entertainment facilities including cinemas and gyms. Equipment in the gyms will need to be replaced over every 3 years, right? over every 3 years. Now there is a very important thing is that in IAS 16 it is written that whenever there is a non-current asset and if it can be split down, if it can be categorized with the significant portion, so that depreciation would be charged on separately, that is on the individual thing. If I can give it very summarized and a quick thing of that the value of gym, cinemas should be separately categorized and should be separately categorized. Now remember that. And according to IAS 16, the gym equipments and the cinemas should be separately splitted and it should be separately depreciated over 3 years. Now what is the potential risk? The potential risk is that depreciation would not be split down on the individual component. Since gym is a separate thing, you probably might be aware of the gym, you probably aware of the cinemas, other entertainment facilities. For example, other entertainment facilities like you can say any kind of an entertainment, let's say for example. Now that area should be separately depreciated. It is known as the components. It is known as the components, right? So I would like to show you one important thing as well. Here you can see that in the last one it is the accumulated depreciation. It was 735 in the last year and it is 784. So 784 minus 735, the depreciation is increasing by 49 million. 49 million the depreciation is increasing. The depreciation is going to increase by 49 million. So information is not given on the separate depreciation. However, we can assume that there is a risk. It is not being separately categorized. So the point is that is the heading would be depreciation on individual components, right? The depreciation of individual components. Firstly, you should write the matter. Then you should give the reference of correct accounting treatment, right? And you should write out the risk. What is the matter? The matter is that the cruise is going to be refurbished, and also there is a separate gym, cinema and other entertainment facility. And as per IAS 16, you should not write the complete name, property, plant and equipment. Even there is not a requirement to write down IAS 16, but since we know it, so we will be writing it. And IAS 16 says that when the components are significant, then they should be separately depreciated over the useful life and separately determine the residual value. The depreciation from the last year was increased by $49 million and not showing the breakup of it. There is a risk that depreciation of individual components are not charged, that is, depreciation of individual components are not charged, and so it is a violation of IS 16. It is a violation of IS 16, right? And so the assets of individual components may be over or understated. Since we don't know what is actually the matter, it may be overstated, it may be understated, so you should write down the over or understated. This is important and needs to be checked to ensure the compliance of IS 16. I had come up with the little recommendations, right? Now what's next? This is a depreciation of individual. Now going forward for this Explorer cruise, the Explorer cruise ship. I'm giving you just 1 minute, based on your reading capacity. Please read this information with a very great and thorough attention. Please read this thing with a very important and thorough attention. It's a very important information. Please read this thing. Can anyone tell me which accounting standard is being applied here? Can anyone tell me which accounting standard is being applied here? Mr. Saifullah sir, I'm addressing your question. Based on the available information, you should come up with a small kind of recommendation, but very small. But do not extend your recommendation. Right? You should just write a very small recommendation. Which IS is being applied here? Yes, Science Siddiqui, you are right. Janzib, you are also right. It's IS 23 and IS 24. Which is the important one? The IS 24 related party transaction is a very important and significant risk. And simultaneously, there is also the application of the borrowing cost IS 23. But first, let's discuss about this thing. I'm not going to read this information here. The Explorer cruise ship, while still luxurious, are the oldest in the fleet, and the group is gradually replacing these with the new ships. During this financial year, 2 new ships with a total cost of 110 will come into use. The ship took 3 years to build and were constructed by Vela Shipper Company. It is constructed by Vela Shipper Company, a company which is not owned by the group. This is the company which is not owned by the group. This is the company which is not owned by the group. However, the chairman of the group, Max, is also the chairman of Vela, and his son is the company's CEO, right? And the chairman of Vela is the, however, the chairman of the group Max is also the chairman of Vela Shippers. So you know, who is the related party? The related party is that who can control the decision making, who can, or the party, you can say the jointly controlled party is the related party. And what is an important thing is that, you should note it down if you want to. In fact, I am writing that IS 24 is not based on its calculation area. Remember that IS 24 is not based on its calculation area. It is based on the disclosure. IS 24 is the related party disclosure. It is for the related party disclosure, which says that nature of transaction, name, relation of related party, nature of the transaction, name and the relationship of related party, and any outstanding balance. It should be disclosed. Now there is a potential risk of non-disclosure. But first of all, you should explain why this transaction would fall under related party transaction. Okay, you should write it down. Why this is a related party transaction. I'm now going to explain this thing that Vela shipper. Remember that Vela shipper, who is building the new the construction for the ship, is the related party. Why? Because the Max is the chairman of the group as well as Mr. Max. You know, Mr. Max is the chairman of the group as well as the chairman of the Vela shippers. And according to IS 24, a related party relation exists when a person has a control, or a joint control, or is a member of a key management of the two reporting entities. So who is the related party here? And one more important thing, the son of Max is the CEO of Vela, right? And so the Vela shipbuilder is the related party. You should write the complete thing. That it should be disclosed. There is a risk of potential non-disclosure. And what would be the impact? Remember that I'm giving you the example, whether the amount is of $1 or whether the transaction is of 100 million. This is the IS, which is not financially based. This is the IS which is based on its nature. That's a non-financial. It must have to be disclosed regardless of the level of the materiality. It's by nature material. I'm not saying this. IS 24 calling it material by nature, so it should be disclosed. There is a risk of the non-disclosure, right? So I'm writing here first, related party transactions. It's a related party transaction, right? You should first write down why this is a related party transaction. Vela Shipbuilders is building the, what is the exact statement here? Is constructing the ships for explorer cruises. For the explorer cruise ships, and this transaction is falling under related party, is falling under related party transaction, and as per IAS 24, a party is said to be related to the company. A party is said to be related to the company when there is a significant control over the decision making of the company, like the member of key management or her immediate family members, subject to their power to exercise on the company. Max is the chairman of both the group and Bella Shipbuilders, and the son of Max is the CEO of the company Bella Shipbuilders. And so this company is a related party under IAS 24, and as per IAS 24, there should be the complete disclosure. There should be the complete disclosure of the nature of transactions, name and relationship of related party, including any outstanding balance. There is a potential risk of non-disclosure, and so the notes can be incomplete, and simultaneously you should need to explain why this risk is a significant risk. You should write why this risk is a significant risk, right? Because it's not material by amount, it's material by nature as well, and so notes can be incomplete. Which may give incomplete information to the users, and the transaction with the related party is material by nature as well. It's material by nature as well, and so this related party transaction is the important and the significant risk, right? Do you understand this thing, why this is a related party and why I have called it a significant risk? Yes, it is the thing. Now let's move ahead for another risk. However, the chairman is also the chairman. The purchase of the ship was financed through 110 million of loan with a fixed interest rate of 6% per annum. A further 3 ships are currently under construction by Vela Shipbuilders. The group has taken out a loan of 180 million with the 6.5 fixed interest rate to finance this capital expenditure. And you know, it's falling under the borrowing cost as well. It's falling under the borrowing cost. You know how the borrowing cost is applied? Can anyone tell me in the question box? Please be interactive with me. Can you tell me what is the risk in the borrowing cost here? I'm just waiting for your answers. What is the potential risk in the borrowing cost? I mean, what should be the correct accounting treatment? First, tell me the correct accounting treatment. Can anyone tell me the figure? Can anyone tell me the figure? What should be the capitalized thing? Yeah, it's 11.7. It's 11.7. 11.7. No, that's one. A further 3 ships are currently under construction by Vela Shipbuilders. The group has taken out a loan of 180 million with a 6.5 fixed interest rate. And it is the application of the borrowing cost. What borrowing cost says that? When your definition, you know, ship is not something which can be constructed within hours. It takes a substantial time period, that is 1 year. And it's a borrowing cost. It's a borrowing cost. And you know, when the borrowing cost should be capitalized, when the activity starts, it's not 110 million into 6%. It's the purchase of the ships. It's the purchasing of the ships. The borrowing cost is applied on the qualifying assets. You know, IS 23 says that it's borrowing cost. It's applied on qualifying assets, and the borrowing cost needs to be capitalized. When it is capitalized, when amount is received, when the amount is received, when activity starts, when activity of the construction starts, and you should suspend or pause the capitalization when the activity is completed, right? When the activity starts. So it was the purchase of the ships. Now here this is the under construction, right? So you should write out about the construction kind of thing. So it's 180 multiplied by 6.5%. That would become what? 11.7. Do you understand, students? Can you please write here in the question box? Do you understand this thing? Okay, I'm now opening the question box. Science Siddiqui, I'm repeating once again. The borrowing cost is capitalized for the qualifying assets, right? When the activity is about to start, and those ships were already purchased. So 3 ships are under construction, and for that 180 million was taken out from the loan. And its 6.5% is 11.7, which should be capitalized. There is a risk it is expensed out. Science Siddiqui, do you understand this thing now? Okay, that's good enough. Now I am going to write this thing. You're welcome. So I'm writing here borrowing cost. I'm writing here borrowing cost. And you should start up with the matter. You should start with the matter. The ships, 3 ships are being constructed. 3 ships are being constructed and falls under the category of qualifying assets, which takes substantial time period to complete and ready to use. This falls under the borrowing cost covered by IS 23, which says that amount borrowed, which says that borrowing cost should be capitalized when the amount is received for the qualifying asset and the construction activity is started. And so the amount $11.7 million should be capitalized. 180 is to 6.5%, and there is the audit risk that this amount is not capitalized but expensed out. As a result, you should write as a result. It should be capitalized. If it is expensed out, as a result, assets and profits can be overstated, and this amount is material with the reference of material amounts at the start of this briefing note. At the start of this briefing note, you have already calculated the amount of materiality. So this is the borrowing cost, which is considered to be the significant risk, right? Now it is said to be the significant audit risk since it has the material amount, and there is the application of the accounting standard. And so it is the significant risk. Now I'm going to moving forward. Pioneer cruise. 3 cruises are for more adventurous travelers and are growing in a popularity. In order to visit certain destinations on these specialty cruises, the group has to acquire operating licenses from the local government. The cost of license acquisition is capitalized as an intangible asset. It is the background information and it's correct. Okay. Now audit team a meeting took place yesterday with the audit partner, discussed several issues. Now this is a very important thing, issues. You need to consider it at your top priority. It is written that Last week, the government of several countries, which forms a major part of Pioneer Cruise itineraries, withdrew their operating licenses with immediate effect. The government has stated that this is likely to be a temporary measure, but they will not confirm when the group can resume the operation in these countries. You know what? From the background information, it was clearly mentioned that for the Pioneer Cruise, there is the cost of license which is capitalized as an intangible asset. Yes, that's fair enough. It's a correct accounting treatment. But in order to visit certain destination, the group has to acquire the operating license from the local government. And what is written here? It is written here that the government of several countries related to the Pioneer Cruise traveling journey, the operating licenses were the government withdrew their operating licenses. Can you please tell me, all of you, can you please tell me which accounting standard is being applied here? Which accounting standard is being applied here? Will you please tell me, or any idea which accounting standard is being applied here? And you know what? The operating license cost would definitely be given in this financial information. Yes, that's the cost of 56 million intangible asset operating licenses. Note number 2. Operating licenses are required for Pioneer to visit the certain destination. Licenses are amortized over the specific period to which it relates to. Will you please give me any idea which accounting standard is being applied here? Now, few people are writing about IS 38. Come on. This is not the risk of IS 38. Why? This is not the risk of IS 38. Why? Because, let me explain you, they have capitalized as an intangible asset. This is not the matter. The matter is something else. Students, please look into this thing. This word is the issue. The word is that of the issue. Issue is that several countries withdrew their licenses with immediate effect. It is that brand which was operating, and the cost was 56 million. This was the cost, 56 million. It was recorded as an intangible asset. It is being amortized. Now, when the government, this is an external indicator of impairment. Yes, very good. Now, listen it carefully. I'm giving you the quick recap of IS 36. IS 36 says that when your carrying amount is greater than your recoverable amount, there is impairment loss, right? There is impairment loss. And what is the indicator of impairment? The indicator of impairment, there are two indicators. One is internal, like any physical damage, and this is the external, like over which you have no control, like this thing that the government withdrew their license to operate. Now, this is the impairment loss, and this analysis is known as the impairment testing. Now, the company, the group should consider whether there is an impairment loss, because since there is an indication, when you compare your carrying amount with the recoverable amount, now the resulting figure is impairment loss, and the entry would be impairment loss expense debit, and your asset is credited. Now, this should be the entry which should be booked. There is a potential risk that this impairment testing was not even conducted by the group, and if so, then expenses which should have been charged was omitted, and so profit and asset is likely to be overstated, right? So this is the case of impairment testing. I'm writing here, I'm giving the heading of withdrawal of operating license. Withdrawal of operating license. Now, what is the starting point of the operating license is that there is the license cost of 56 million, and this amount is very material as calculated in the the threshold of the materiality. So license are correctly recorded as an intangible asset. Now this is my evaluation, and they are amortized, which is the correct treatment. But the audit risk is that you should need to consider it whether or not it is impaired. So the withdrawal of operating licenses. Operating license was for the Pioneer Cruise, right? For Pioneer Cruise, operating license for the Pioneer Cruise amounted to 56 million, and so material to the group based on the monetary value of materiality at the start of this briefing note, and it is correctly recorded as intangible asset and amortized over 3 years. However, for the non-current assets, the group should consider whether or not it is impaired. IS 36 says that an asset is impaired if its carrying amount exceeds the recoverable amount, and this is the impairment test. When you compare carrying amount with your recoverable amount, this is known as the impairment test, and this is the impairment test and should be carried out when there is any indicator like internally, for example, any physical damage to the asset, or externally like the change in the loss. And since the government of many countries do them to operate, and so it is the external indicator of impairment. The impairment test should have been carried out. There is the audit risk that to test for the impairment. As a result, increasing chances of overstated profits and assets. As a result, there are increasing chances of overstated profits and assets. Now this is not the matter of IS 38. Yes, exactly. I strongly prefer first. I strongly prefer first to complete this answer. Then you should go for the marking scheme for it. But I strongly prefer to go for the completion of the answer. Right? Now let's move ahead for the another information. It's a cyber security attack. I am giving you 1 minute window to read this information. Only cyber security, not the social and environmental information, not at all. You must read only cyber security attack information. It is basically the control risk. It is basically the control risk. Cyber security attack. Now, can anyone tell me what is the risk here? It is the control risk that I have told you. I have told you that there is the control risk, right? But what is the impact on the financial statements? What's the impact on the financial statements? Yes. And now I'm going to read this information. Sorry. Last month, the group suffered a cyber security attack in which the personal information of 1,400 customers, including their credit card details, were stolen, according to the representative of the group audit committee. The group internal audit team had not properly assessed the risk relating to the cyber, which is the requirement of recently introduced data protection legislation in the jurisdiction. The issue which led to the cyber has now been resolved. Now, giving the heading of cyber security attack. One thing I would like to mention again, as I had mentioned in the day one yesterday as well. For 4 communication marks, this is a format, and you need to write everything with the proper heading. This is the requirement for the communication skill. You need to write with a complete and proper heading with the bold thing, right? This is the cyber security attack. This is the heading. You should write down the heading. Now, what is the matter and what is the issue here? The issue here is that the group suffered a cyber security attack. Suffered the cyber security attack. The group suffered the cyber security attack. As a result, data of 1,400 customers had been stolen, and this is even against the legislation of data protection. This is there should have been the response of the internal audit team in order to resolve, which was not done at the right time. And there may be the legal action against company. For example, if the customer file the case against the group for the violation of Data Protection Act, then there are increased chances of penalty being paid from the side of the group. There is a risk that provision is not booked regarding that penalty provision. All right, because it is something which can disturb to the customer, that their data, including the credit card details, have been stolen. And this is the very important risk, because it's a matter of the reputation as well. It's a matter of reputation as well, which was not done at the right time. If the customers file the case against the company, against the group, that their significant information had been stolen, and since the company had, and since the group had not complied with the Data Protection Act, which is the significant matter, since it may result in suspension of the activities. It is probable, if it is probable chance, what I had written related to the business, that it may result in the suspension of the activities. Now that is very punchline to prove that this is a significant risk, to convince that this is a significant risk. If the chances of fine claimed by the customers is probable, then provision should be booked against it, and failure to do so, is the phrase which is referencing to the risk, and failure to do so would result in understatement of provision and overstated profits. In addition to this, there is a control risk, and since their data is being stolen, now this is a very important risk. I'm going to add this thing with the cyber security attack. That means their IT controls are not adequate, and most of the cases, I'm giving you the practical example, like Amazon, Alibaba, or any other authentic online channel. If you go to them, if you buy any product, you are paying in advance, right? And there is a very important thing, that the control system in the website should have been designed in a manner, when the payment is taken from the customer, it should be entered automatically in the accounting records, like this is the deferred income, cash debit, deferred income credit, right? So when there is there's a control risk related to the IT, it quite may be possible that their website, that their IT system is strongly linked with the revenue recognition. And so if your data protection, your control is poor, so any financial figure like revenue or any kind of financial figure can be over or understated because of the control risk, since the control is poorly designed and poorly managed here. In addition to this, there is a control risk, since IT controls are not adequate here, based on the analysis of the data stolen due to cyber security attack, and it may be possible that various accounting figures like revenue, because revenue is the most important thing. It's the initial thing of the income statement. And when your base is wrongly presented, now there will be the impact on the profit as well. Like revenue can be linked with the digital system, and if data can be hacked, then there are increasing chances that other accounting figures can be over or understated, or even the revenue may be wrongly recorded in the wrong time period. There are two risks related to the cybersecurity, and because cybersecurity gives rise to this risk as well. Now let's move ahead for another risks. Let's move ahead for another risk, and you need to analyze the financial information. You need to analyze the financial information because they have presented us the financial information, and we need to analyze it. But before going to proceed with that thing, I would like to give you the introduction of a very quick recap of one of the important IFRS. No problem at all. Yes, crystal trail. Crystal trail, there is a reputational damage, but reputational damage is the business risk. I am translating that impact onto the financial statements because we are here to discuss the financial statement risk, right? So the reputational risk is a very significant. Yes, this is very significant. But we need to translate that risk with the impact on the financial statement. Crystal trail, is it now clear to you what I'm trying to say? Yes, students, please hold on. I'm giving you the break as well. Please hold on. Just wait a minute. Crystal, it is now clear. Yes, you need to translate your risk to the financial statements. Otherwise, your answer is not completed. Okay, now students, based on your constant requests, I'm giving you the break, and it's only about 15 to 20 minutes. It's now 10:05 p.m. based on Pakistan time, so I will be resuming after 15 to 20 minutes of a break. I will be resuming at 10:20 p.m. around. Okay, do not disconnect, do not go away. I will be resuming it after 15 to 20 minutes. Your break starts now. Yes, students, we are now back from the break, and I would like to confirm that you all are here. My voice, screen, video is all clear to all of you. Please give me a response in the question box. Please give me a response in the question box. We are now back from the break. Okay, now let's proceed this thing. I would like to give you the introduction, a very quick and a brief recap of one of the important IFRS, which is the operating segment. You know, IFRS 8, it is operating segment. Which is the operating segment? Operating segment, what is operating segment actually? Operating segment is actually which is the separate component of entity. It is separate component of entity, incurs expense and raise revenue, and its performance is monitored by chief operating decision maker, right? This is known as the operating segment. Operating segment is actually the separate component of the entity which incurs expense and raise the revenue, and performance is monitored by CODM, chief operating decision maker. Chief, the one who is the chief, and he has got the operating decision making authority, right? And those operating segment would become the reportable segment. Reportable segment, when it would become the reportable segment, the reportable segment criteria is 10% rule. The 10% rule is that when the the segment revenue is 10% or more, reportable segment when its revenue is 10%, when its revenue is 10% or more, 10% or more of all the combined revenue of operating segments. When alone revenue is 10% or more of the combined revenue of the operating segment, then this will become the reportable segment, and it should be separately presented and separately disclosed. Now, the important point is that here in this background information, the selected notes here is that you can read the remaining 15% revenue is derived from onboard sale of food, drinks, entertainment. I have displayed you the selected financial information. 15% of the revenue is derived from the onboard sale of food, drinks, entertainment, and other item to passengers. Here it is written, management monitors this revenue stream closely as it achieves a high gross margin and staff is encouraged to maximize the sale. The performance, the performance of this revenue stream is closely watched, is closely monitored. So that is giving birth to the operating segment, and there is a risk. It is not separately disclosed. You can even point it out over here. It is the ships in use, ships under construction, other property, plant and equipment, Sunseeker, Explorer, Pioneer. There is no separate disclosure related to the that 15% onboard sales. So there is a potential risk. It is not being disclosed over here. So I am writing right down here. That is the reportable segment. I am writing that the reportable segment of this thing. Is it now fine? Whether my screen is clear? Is it now clear? Probably there would be the technical glitch. Is that now clear? All of you please respond. Okay. I am showing that thing again. No problem at all. I had written down this operating segment. If you people want to make it quick, just capture the picture of it. I'm repeating my words again, that this is the operating segment. Operating segment is any segment which is a separate component of the entity, which incurs separate expense, separate revenue stream. Its performance is monitored by CODM, Chief Operating Decision Maker. And this segment should be separately reported, where its revenue is 10% or more of all the combined revenues. And here I was saying that you can see that 15% of the revenue is derived from onboard sale of food, drinks, and entertainment and other items. And it is clearly mentioned that management monitored this very closely. This stream is very closely monitored by the management, and so this is the operating and the reportable segment. It should be separately disclosed. If I had if I need to show, if I can show it, please look at this thing: revenue per operating segment, Sunseeker, Explorer, Pioneer. There is no separate disclosure of the onboard sales, right? So this is the potential risk of the non-disclosure. So I am writing that operating segment, operating segment. There is the onboard sales, there is the onboard sale of food, drink, and entertainment, whose revenue is 15%, whose revenue is 15%, whose revenue is what? The 15%. And this fall under the scope of IFRS 8. It's IFRS 8 operating segment. This is the operating segment under IFRS 8, according to which the segment is said to be the operating segment, which is a separate component of entity. You should write all these three things, which is the separate component of the entity, incurs expenses and generates revenue separately, and whose performance is monitored by the chief operating decision maker. And the operating segment becomes the reportable segment, and the operating segment becomes the reportable segment when its revenue is 10% or more, when its revenue is 10% or more of the of what of all the combined operating segments, of all the combined operating segments. And there should be the disclosure of the reportable segments, and from the available you can refer to this selected information, revenue per operating segment, and from the available segmental revenue, it's not separately disclosed, and so there may be the incomplete information related to the segments supplied to the users. The users may not be well aware that what kind of segments they are operating in, right? And you need to analyze, please make it quick, and you need to analyze this information as well. If I can, the issues with the Pioneer courses, right? Because its licenses were withdrew, the license were due by many of the governments. So just calculate the issue of that thing. Can you please calculate to what extent the revenues are getting increased? 264 minus 192. The revenue of Pioneer Cruise is getting increased by 37.5 million. That's information which is already given. That's information which is already given. Can you please calculate the the total revenue is getting increased by which percentage? 764. The revenue is getting increased by, the total revenue is getting increased by, it's 14%, right? It's 14%. And see that operating profit, is getting increased by this operating profit. It is getting increased by 43.6%. The combined revenue was increasing by because the revenue of because there is the revenue of total, as because the operating profit is not mentioned individually. The profit was increasing by 43.6 million, and the revenue was increased by only 14 million. The revenue is only increased by 14 million, and profit is getting increased by 43.6%. This is something seems to be very inconsistent, because revenue is increasing by 14% and profit is getting increased by 43.6%. This seems to be inconsistent. It may be possible that some of the expenses are understated, are omitted to allow the profit to be increased, to allow the profit to increase unexpectedly. This is the analysis. From the this is the analysis from the financial information. This is the analysis from the financial information. Right? And you can write this thing, something irregular financial figures. Irregular financial figures. It's irregular financial figures. The collective revenue is increasing by 14%. If you people want, you can refer the figures. It's 764 minus 670. It's 764 minus 670. 764 minus 670 divided by 670. And the profit total is increasing by 43.6%. You should show the calculation as well. It's 145 minus 101 divided by 101, and seems to be inconsistent with the rise in revenue. And revenue should be, now what is the risk? There is a potential is that revenue may not be splitted. Some revenues may be understated, some revenues may be overstated, or some operating expenses might be understated or omitted. It quite may be possible. And it may be possible that some of the expenses may be omitted to allow the profit to be reported overstatedly. All right, this is the analysis. And one important critical issue is that with the Pioneer cruise, see that the revenue of Pioneer cruise, there is one more analysis can be made. We can just write the percentage of each and every the segment reported. Furthermore, the revenue from individual segments should also be analyzed. That is, there are three potential revenue stream. That is Sunseeker. Will you people please pick up the calculator and calculate the percentage? I'm doing it manually. For the Sunseeker, it's 11.1%. It's 11.1%. For Explorer Cruise, it is 5.3%. And for Pioneer Cruise, it is 37.5%. You know, one important thing is that the license to operate was withdrew of Pioneer, and its revenues getting increased by 37.5 million. It is something very critical and shocking news for the auditor, right? And there is a potential risk that some revenue of Explorer might be wrongly classified or might be wrongly shifted to the Pioneer revenue stream. Anyways, this is a very important thing. It is a significant risk that, because I have used that skepticism and you should also, it is a significant risk that revenue of Pioneer might be overstated given the fact that its license to operate was withdrew by many of the governments and its revenue was increased by larger proportion as compared with other segments and it may be possible that revenue of other segments might be wrongly charged, might be wrongly recognized in the Pioneer one, which needs to be checked through the inspection of the breakdown of the revenue. That's it. This was my audit risk. Now I'm quickly coming towards the um, audit procedures. I'm quickly coming to the audit procedures because the next requirement is of audit procedure. But first of all, I would like to give you the introduction about the audit procedure. This is my audit procedure. Now, more important thing about the audit procedures. Now, I'm quickly coming toward the audit procedure so that we will be able to write our second requirement, audit procedure. Or what is the audit procedure? 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 Audit procedure is actually the actions. These are basically the actions of the auditor. These are basically the actions of the auditor. Auditor has to apply some procedures, and procedures are applied on controls as well as substantive testing. For controls as well as for substantive testing, right? For controls as well as substantive testing. Now, whatever the auditor is doing, it's known as the procedure. Whatever the auditor does, it is known as the procedure. And whatever the information auditor collects, it is known as the evidence. So auditor applies the audit procedure in order to collect the sufficient and appropriate audit evidence. What is the audit evidence? Audit evidence is actually the result which auditor does obtain through applying the suitable audit procedure. Now, the audit evidence should be sufficient and appropriate, but first, before going to discuss these things, I would like to discuss the audit procedure. These are the actions of the auditor. And you should remember the mnemonic Cairo, CAI power 3 R power 2 O. This is the mnemonic Cairo. It was this is a very memorizable and easy mnemonic. I have seen this mnemonic in one of the study texts, the older publisher of the ACCA study text. I have seen this mnemonic. Now that's very important to memorize easily. I had not created, nobody created this mnemonic. This mnemonic was in the official study text. Okay, now the Cairo is the audit procedure, right? C for confirmation, external. A for analytical procedure. I3, inquiry, inspection of asset, inspection of document. Recalculate, reperform, you probably might be aware of the audit procedures, and then is the observation. Now, auditor is applying the audit evidence. It should be sufficient. Sufficiency means quantity of the evidence, and it depends on the knowledge and skills of the auditor, level of risk of material misstatement, materiality, matter under consideration. And appropriate is the quality. Appropriate is the quality. Quality means quality is breakdown into two categories. Number one, relevant. For example, the assertion is accuracy. It's a relevant procedure to verify relevant assertion. If you want to verify the assertion accuracy, you need to apply recalculate. You need to apply the procedure that is the recalculate, and recalculate means you just are having a calculator doing it recalculation, and the accuracy will be verified. Now the reliable. Reliable is actually the trustworthy source of evidence. It's oral? No, not at all. Written is the reliable. Original document is the reliable. Auditor himself. You are the auditor, so you should apply the procedure by yourself. External and internal are the sources depending on the scenario. For example, that there is a lack of the evidence regarding the bank loan, and so the external confirmation from the bank is more reliable. And internal means the internal records of the company. Now this is a very basic thing, and so I would not be spending too much time to discuss these things. These are the procedures. And well structured answer. This is the well structured answer. You should write the procedure. Procedure means Cairo. It's the source. Source means from where you collect the evidence, and you collect the evidence from documents. Some document may be the source, any person may be the source, any place may be the source. And what is the purpose? The purpose of your procedure and source is to verify financial statements, accounting, and its assertions. Now the well structured answer should cover these elements, and it should be well explained. Now the example is this: the company had purchased the machine and is placed in the production room. What is the procedure? Inspection of assets. What is the source? Production room. The purpose is the existence. Now this is the well structured answer. This is the well structured answer is that physically inspect the machine purchased in the production room to verify the existence, right? And you know what? This is a very important thing, that your procedures should cover the purpose as well. Your procedures should cover the purpose as well. Now, moving next. Remember the important thing for the procedure. The important thing for the procedure is that think the correct accounting. You should think the correct accounting. You should think of correct accounting and try to chase or try to follow that accounting. If I can keep it very simple for you, when you are supposed to write the audit risk, you should assume what can go wrong in the financial statements. And while writing the audit procedure, you should think of the correct accounting, and try to chase or follow that accounting. Let's say for example, if there is written that company had disposed the NCA. Company had disposed the non-current asset. So what would be the well-structured procedure? You are assuming that the NCA had been disposed of. So it should have been removed from the NCA register. So you are just reviewing the non-current asset register. Review the non-current asset register to confirm that disposed NCA disposed NCA is removed from the non-current asset register, from the non-current asset register. So this is the well structured answer, that you are expecting the correct accounting treatment from my side. You are expecting the correct accounting treatment from my side, and so that you are able to write down the correct procedure. You are able to write down the correct procedure in an orderly manner. So it is very much important for you people. It is very much important for you people to think of the correct accounting. And accounting is the backbone of the audit stream paper, that you should think of the correct accounting. If you would be chasing up that correct accounting, that means that procedures would be designed. And if you are getting it reverse, it becomes the risk, right? So let's now proceed with this audit procedure. Let's now proceed with this audit procedure for this thing, for the second requirement. Now I'm going to write my part B requirement. Part B requirement was of the procedure, the partner's email, that is design the principal audit procedure to be performed on the segmental information related to group revenue. Segmental information, 5 marks. Remember, you should write at least 5 points. Okay, now the briefing notes. I am writing here audit procedures on the segmental information. Audit procedure on the segmental information. Now for that segmental information, that's why I had written down this IFRS 8 operating segment. You know, for the segment to be classified as the operating, because if the segment is operating, then it would be classified as the reporting segment if the 10% revenue the criteria is met, right? So first of all, I should make clear that there is a separate component of the entity. The separate expenses are getting, simply follow the requirement of ISS. Follow the requirement of IS and you will be able to write down the procedure very simple. So you should first you should review the breakdown of the segments in order to ensure that the segmental information, okay, the segmental information is a separate component and generating separate expense and generating separate revenue and incur separate expenditures. So what I will be writing here, review the I will be writing like review the breakdown of the segmental information to confirm that they are separate component and incurs the expenses and generates the revenue separately. Furthermore, you should also inspect the organogram, which is the organizational structure, in order to witness the evidence that there is the presence of chief operating decision maker. Because if the performance is not monitored by the chief operating decision maker, that is not the operating segment at all, right? So you need to review the organizational structure to identify the presence of the chief operating decision maker who is there to monitor the performance of the segments, right? You need to review the organizational structure. And one more important thing is that you should also discuss with the management how frequently the results are being reviewed by the chief operating decision maker, whether it is daily, monthly, weekly, quarterly, semi-annually, what? Because if it is being monitored closely and regularly, that means that is a very plus point for the segment to be called as the operating segment. So now I will be discussing this discuss with the management how, to what extent, to what extent and the means of monitoring the performance of the operating segments by the chief operating decision maker, whether it is monthly, quarterly, so that you can understand, that this is really an operating segment. So you are performing the procedures on the segmented information. Now, one important thing, you should recalculate the revenue of each operating segment in order to calculate that the revenue contributes more than 10% of the collective group revenue, right? So you can simply recalculate, because it is the requirement of the reportable segment that its revenue should be 10% or more of all the combined revenue of the operating segments, right? So recalculate the revenue. You should recalculate the revenue. And now the most important thing, which one is the important operating segment for you people? You should recalculate the segmental reportable segment, right? You should recalculate it. So recalculate the revenue of the segments, recalculate the revenue of the segments by having the by inspecting the revenue from the breakdown of segmental revenue, and confirm that, what you want to confirm, that segments contributes to 10% or more of the combined group revenue, right? You should write this thing. And one more important thing is that once the operating segment is identified, it will need to be reported to the board of directors, and you should ensure whether these segments need to be separately disclosed, and also inspect that there are separate disclosure. So first I will be inspecting that board of director is receiving the same information. I will be inspecting that board of director is receiving the same information, and the same thing is being published in the financial statements, right? So I am reviewing that. Review the, what do you want to review? Review the financial reports presented to the board of directors, confirming the basis of the operating segments and the reportable segments, and their authorization to publish these. You should also inspect, discuss with the management whether the reportable segments were separately disclosed. If yes, then inspect those reportable segments. Then inspect those reportable segments to confirm the compliance with IFRS 8. Now I have written down how many procedures I had noted here. 1, 2, 3, 4, 5, 6. You should write at least 5 points, right? So this is the way to write the audit procedure. Procedure, source, and purpose. I'm not teaching you like a very basic, but I had explained like a basic manner, right? Now part C is there, and we have sufficient time to discuss for part C as well. Now from the part C, it is what's the requirement? The requirement here is that evaluate the matter to be considered in exhibit number 4, and you should I'm giving you just 1 minute window to paragraph read this paragraph, please. And this is something related to ethics, and I will demonstrate you first how to draft the answer, how to write down the answer, and I will be simultaneously typing my answer. Please read this information, the social and environmental information, which is one of the current issue as well. But first read this information, please. Pegasus and Company is the name of the audit firm. Okay, the group audit committee has inquired whether Pegasus can provide additional services to advise the management. Please focus on the word advising the management. Advising the management is perceived to be taking the responsibility of the management. How to measure certain social and environmental information, which is to be published on the group website, and it is required by the new regulation, and is required to be submitted to regulatory authorities. The social and environmental information relates to the matters such as water efficiency, energy consumption, charitable donations, which support diversity in the workplace. In recognition, this work is quite urgent. The deadline, deadline is perceived to be the intimidation threat. Authorities fall within the next month. The group audit committee has stated that it is willing to pay enhanced fee for these services. Please, students, read out this requirement for 10 marks, and we should write with a complete professionalism. It's written, evaluate the matter to be considered. Evaluate the matter to be considered in deciding whether the Pegasus should accept the engagement to provide advice on the group social and environmental information. And when you are supposed to write the evaluation kind of thing, I see that what I'm now going to write. When you are supposed to write the evaluation, evaluate the matters. When you are supposed to write down the evaluation of the matters, when I will be writing this way, you should click this, okay, so that there will be the saved file for you. Evaluate. You should write the matter. You should write the ethical guidance by IESBA or ACCA Code of Ethics, and you should write the word if unethical practice. If unethical practice, then what would be the impact? And the impact would be on the profession. Yes, profession, because you should not give chance to the public to comment something negative on your profession. The impact on the profession, the impact on the user's mind, the impact of the message for public at large. And unethical practice, you should refer the ethical threats. You should refer the ethical threats. And you know that there is a self-interest threat, the personal benefit of the audit team, the self-review threat, which is the reviewing the same work by yourself, The intimidation threat, that is client is exercising undue influence. There is the familiarity and advocacy threat. So you need to write this thing. Plus, when you are supposed to evaluate, then you should give the recommendation. You should give the recommendation, which is the safeguard, and also explain its benefits. You should write these things. You should write these things for your answer. I'm saving this file as well. Later on, I will be naming this file. So your answer should cover all these things with the formal explanation. Right? So without discussing it further, I'm now quickly coming to my briefing notes and my answer for part C. I'm now going to discuss this thing with the subject matter, that is part C. And what is actually written here in part C? In part C, it is actually saying to comment on the matters. It is actually saying to comment on the matters, the issues which had been discussed, the issues which had been presented for your attention. You should evaluate those matters. So I am writing regarding the additional services for it's something additional services by the firm on social and environmental information. Okay, so you need to start with the introduction. There is the sorry there is the there's a groups there's a group request for the firm to provide additional services to the group which includes the advice to the environmental information. And you know that social and environmental information, it will be published. And remember that to advise something to the management, that means taking the responsibility of the management, which is prohibited under ACCA code of ethics, right? Which is prohibited under ACCA code of ethics. Under ACCA code of ethics, it is not allowed. So I am writing here, which is advice to the social and environmental information, and advising to the client, is does mean taking the responsibility of the management, which is not allowed by the ACCA code of ethics. However, if any advice is given, then it should be ensured that any significant judgment should be exercised from the side of the management. It should be ensured that any kind of the judgment should be from the side of the management, right? Any kind of judgment should be exercised from the side of the management, and engaging in such an activity would generate the ethical threats. engaging the firm in such kind of the activities, would generate the ethical threats. The ethical threat would be, what is the ethical threat? If I can just read this thing, that it would be published, there would be the self-review thread. You know why the self-review thread is? That because since this is the other information, there would be self-review thread in two perspectives. Number one, if the audit firm will be giving the advice, and definitely it will leave the impact on the financial statements, like the charitable donations, energy consumption, all these things would be financially recorded in the financial statements, right? It would be recorded financially in the financial statements. And one thing to be very important is that if this thing would be, if this thing would be recorded in the financial statements, then auditing it later on would introduce the self-review problem. And one more important thing, this this is the part of the other information, other information in the audit report. Remember ISA 720? Yes, ISA 720 is the other information in which the auditor is asked to read the other information. The auditor is asked to read the other information, and the auditor would be reading the other information. It is already advised by the auditor, so it would be self-review thread from two different perspectives, right? So I will be writing this thing in this briefing note. The ethical thread would be the self-review thread. That is the self-review thread. That is how the self-review thread. That is when the audit team would be advising on this social and environmental information, then definitely there would be the impact on the financial statements, like the recording of the charitable figures. And doing this audit later on okay, and doing this later on would generate the self review threat. Okay, and doing this audit later on would introduce the self review threat. That is reviewing the same work performed by the auditor. And when you are reviewing the same work which you have performed by yourself, that means that own mistakes may not be identified, and analyzing the same thing would introduce that the same mistakes cannot be identified by the auditor, and own mistakes or any misstatement may not be identified and not be reported for the correction, right? And in addition there is a requirement by ISA 720 to read the other information, and that other information is actually being advised and prepared by the auditor, and that other information is actually being advised and prepared by the audit team. And so the self review problem would again be introduced. And would again be introduced, and self-review problem would again be introduced, and again own mistakes may not be identified, and own mistakes may not be identified. And this is one of the important and critical issue for the audit team. And if this issue would be occurring and may be in the public attention, then audit credibility credibility may be lowered down. Then audit credibility, audit opinion, that audit opinions credibility, that audit opinions credibility may be lowered down, right? Will you people please come out to the question box and give me the feedback? Are you understanding this thing? Are you understanding this thing? Are you understanding this thing? Students, please reply me in the question box. Okay, that's great. That's great. That's great. That's great. Okay, so audit opinions credibility may be lowered down when it becomes the public attention, because if that issue would be coming the public attention, then obviously there would be the question mark on the credibility on the audit opinion, right? There could be the negative impact, there could be the negative impact on the opinion on the credibility. Okay, and further there would be the self-interest threat. There would be the self-interest threat. In addition to it, there may be the self-interest threat, that is, there is an offer for the high fees, and fees is the financial interest, and this is so significant that no safeguard can reduce it at an acceptable low level, and that fees is the very sensitive issue, and it is so significant that no safeguard can reduce it at an acceptable low level, as an acceptable low level. And you know what, there could be the impact against the high fee. Let's say for example that if the auditor is earning high fees, if the auditor is earning high fees from this other non-audit services, it quite may be possible that receiving the high fees may result in expressing the unmodified opinion in the financial statements when it should be modified. Let's say for example that there is a misstatement in the financial statement, then the client may exercise the undue pressure that I am paying you more for the non-audit services. Ignore the misstatement, give me the unmodified opinion. It quite may be possible. It quite may be possible, right? It quite may be possible for this thing. Another problem with the high fees for this non-audit service is that auditor may be influenced by the management to ignore the misstatement and express the unmodified opinion, like when it should be modified. And so the independency of auditor can be undermined against the high fees, right? This is a very important risk that you are financially blackmailed, you are financially uh, dependent. And one more important thing, one more important issue is that I am highlighting that there is a deadline for submission to this regulatory authority, right? There is a deadline, and there is a deadline to submit this, and this will introduce the intimidation threat. Furthermore, I am writing that furthermore there is a deadline. There is a very single statement, and a lot of ethical threats are being influenced on this thing. Furthermore, there is a deadline to submit this social and environmental report to the regulators, and so time pressure is the intimidation threat, and working in the intimidation threat would result in the compromise of the work being performed, right? Then the quality of the work can be compromised. The quality of the work can be compromised, right? The quality of the work can be compromised, impacting the quality, compromise the quality of the work being performed. One more important thing is that this is not the work of the taxation service. This is the work of the professionalism as well. And while writing this thing, come on, one more thing. You should also write the practical and professional issues. Practical and professional issues. You should also write the practical and the professional issues. How to write the practical and professional issues? I am explaining this. How to write the practical and professional issues? Think of the time and the capability. Do you have sufficient time? Do you have sufficient time? Do you have skills? Do you have knowledge for it? These are the practical. And do you have sufficient team for that? For example, that I am having the proposal for the assignment, and I do not have sufficient time, skills, knowledge. It is simply unprofessional, right? So in addition to this, some practical and professional matters should also be considered. That is whether the firm that is whether the firm has enough time, team, and sufficient knowledge or experience to perform the to give the services, to give the advisory services to the client related to the social and environmental activities. And if not, then consider to employ the staff in the firm with necessary knowledge or skills related to this activity. Right now, this I have discussed the ethical and the professional issues. Now I need to write the safeguards. Right? I need to write the safeguards. Right? So what is the safeguard? If the firm is being selected by the certain company, there is a safeguard, which is simply the Chinese wall concept. That is a separate partner, separate team, and the signing of the confidentiality agreement. This is the This is the safeguard. So here safeguards need to be applied to reduce the ethical threats at an acceptable low level. At an acceptable low level, the priority should be given. The priority should be given to use the different engagement partner with a separate team, and signing of the confidentiality agreement between them, not to share the information related to these matters, right? And in addition, the next team should ensure the involvement of staff with necessary knowledge and skills to perform the social and environmental work. One more important safeguard, and that is the quality control reviewer. That's EQCR, engagement quality control reviewer. For example, one partner is auditing, second partner is providing this social and environmental services. Now there should be the EQCR, engagement quality control reviewer, who would be reviewing these works to ensure that required quality is being exercised. So in addition to it, EQCR, that is engagement quality control reviewer, should be engaged to monitor the quality of the audit and the other advisory services related to the social and environmental information, to ensure the required level of quality. Right now, this is the end of the answer, but not the end of the webinar. I should write the I had explained you earlier in the day one, you need to write the very precise and concise conclusion. You need to write the very precise and concise conclusion. So I am giving the heading of conclusion as well. And while writing the conclusion, you are actually summarizing. What you had written in 2, 3, or 4 lines. Now this heading, starting point, ending point, and the conclusion will give you 4 marks, and the additional professional marks are being embedded. So this was the practice of question number 1, right? So you should write the conclusion. The briefing note highlighted and numbered. This the briefing note, you should write the conclusion, right? This briefing note highlighted the number of significant audit risk, and what we had written, significant audit risk considering the upper spectrum and Furthermore, in this briefing note, there were audit procedures as well. There were audit procedures as well, and the issues along with the safeguards discussed. In addition, number of audit procedures were suggested on the segmental information along with the discussion on the issues, ethical and practical issues related to the advice on the social and environmental information along with the safeguards to reduce the ethical threats at an acceptable low level. And this is the end of the answer. Now, before going to formally exit from this webinar, I would highly appreciate your response and feedback. Do you people understand how to draft this question number 1 since 50 marks? Please reply with honesty. Please reply with a great honesty. All of you, please. All of you, please respond. Okay, that's great. That's great. That's great. Now, students, I strongly recommend you to revise these things with all best wishes. We have 2 days more for this AAA Practice to Pass webinar, and I am signing out from this webinar. Have a good day. Have a good night. Take care. Bye bye.